What is happening in the markets and how can it affect me? Hey, this is CeoTrades, where money works for you. Today we're looking at the markets and seeing how the news can affect us. What's the benefit in finding out news? Now, before I give you this information, which is very important as we head into December, number one is I am not your financial advisor. Always seek the help of a professional in order to make the best decisions for you. Here we go. Now, looking at the news, as I have my screen shared here, the news is very important to look at, especially the times that we're going through right now. I'm going to go through a list of some of the news very quickly in the next minute or two so that you know what I'm doing. Number one is I'm not investing right now. I'm watching. Why? Here we go. This is why. Commodities sink as COVID spread, protests worsen outlook. Taiwan elections set stage for tense 2024 presidential race. Disruptive China prompts Canadian tilt toward Indo-Pacific. Forex dollar gains, yuan slides as China's COVID unrest spooks markets. Hyundai Motor LGES consider building 2 JV battery plants in U.S. report. Wrap up, 1 China COVID cases hit fresh record high after weekend of protests. China poses increasing threat in military space race. Top U.S. generals say China assets on choppy path amid COVID unrest, analysts say. Oil plunges to lowest since 2021 as China unrest rattles market. Now, China, everything is about China. There's a lot of news going on China. Are we going into war? Are we not? Are they interfering with airspace or not? And so on. Update 1. Japan's Kishida rules out changing policy agreement with DOJ. You want to read more about these? Just go to finance.yahoo.com. Why is this important? Because in the next few days, Jerome Powell is going to come out, and according to what I've read, he's going to ease off on the interest rate hikes. Is that good news? Yes, it is, and no, it's not. Obviously, having better interest rates is best for those people who are getting ready to buy houses and so on. But the reality is this: it's a trap, and that's why I don't like this information. Meaning, number one is the reality is if Jerome Powell eases off on the interest rates, people are going to jump in. People are going to invest. People are going to go right back to normal and think everything's back to normal. No, guess again, it's not. It's a trap. Meaning, things are going to go upward. Let me see if I can bring up my chart here so that you can see what I'm talking about. Let me share my screen. And let me get a pen out here if I can find, let's see, drawing tool. There we go. So this is what's going to happen. You see this level right here that I'm on? There's a chance that the stock market will drop a good 10 to 30% in the next 30 to 4 months, 30 days to 4 months. Now, the reality is it going to happen? We don't know. But if people start to invest, this is the SPY and the S&P 500 ETF. If this goes up a little right in here, and we're looking at this at long term, if we look on a daily chart, let me see here, do 15-minute chart, you can see here that it has been trending upward in the last several trading days, since last week around Monday or Tuesday. And if in the next few days Jerome Powell says that the interest rates are lessening, this is going to go up a little bit more. But then what's going to happen? Those people are going to wind up in an inverted cup. They're going to be trapped up here. If you can see how I'm waving my mouse, it's an inverted cup. And those people who are at the top are going to stay stuck there because now their value has gone way down, and they're going to wait and see how long it takes. But this is the reality. What we're going through right now is very serious. There's a lot of money being printed out there, a lot of money being printed out. How in the world are they going to decrease the interest rates and not do anything about the money out there? Number one is I recommend that you read about the Great Depression of 1929, 1933, and find out as much information as you can, because this will prepare you for what is coming. There was a shortage of food, shortage of work available out there. There were very few people who were able to purchase items out there, and this is all coming back. It's all coming back. Even if the numbers do not reflect it immediately, it's all coming back. Now, why am I referring to the Great Depression? Because the Great Depression on average lasted 10 years. 10 years to get out of that situation. Now, I call it situation because it's a money situation. It's all about the money. And if there's so much printing of money, how are you going to make it back? There's way too much money being printed out there and not enough being made back. And that creates a huge problem. People are talking about a depression again, or even stagflation. Very similar. And stagflation is, I'd say it's very similar to a depression because there's no movement. There's no movement. And stagflation tells you that there's no movement. There's a good chance, or there's a chance that we're going to have a long recovery period necessary if the markets go down 20 to 30%. Now, one of the sources that I follow predicted that the markets are only going to go out this much, and I'm going to share that screen. Give me a second here so I can share it with you. This is the S&P 500 index. According to Goldman Sachs research, they predict that there's only going to be a 10% drop. However, what happens if it's a 30% drop, which would be somewhere down here, 20 to 30%? That's the black line. In their story, it says 10%, but there are other sources saying that it could be up to 20 to 30%. Can you imagine if it goes down 30%? 10% is a normal drop. I mean, that we've seen regularly. You can see it here in the charts. A lot of times it drops somewhere close to that. But 20 to 30%, I mean, it's slowly downward trending, and I figure it will downtrend more. There are a lot of signs out there why it's downtrending. Number one, obviously the money. Number two is a lot of people are purchasing, even including the government is purchasing gold. They're going back to the gold standard. I mean, Goldman Sachs is very well known in reference to what they do, but the reality is that their lending right now is at an all-time high, and I don't know how people are going to pay back with this impending either recession, depression, stagflation, whatever it's called. The reality is not enough money out there to be able to pay it back. So this is what I recommend. Watch the markets. Watch videos on the Great Depression. See what you can learn and apply it. What are the 3 things that I tell people? Stop spending, start saving, and keep reading and informing yourself about the news, because eventually you'll be able to invest and make so much more money than you can right now. This is CeoTrades, where money works for you. Always invest in your knowledge account so that your money market account will grow multiplied. Until the next one, take care.